Hey everyone, this week I'll focus on what the national election results mean for investors. Now, as I record this video, votes are still being tallied, the results have yet to be confirmed, and I suspect that the results will be challenged in court. But for this video, I'll speak to the current leading opinion of what the results will be, and that is that Joe Biden will be elected president, the Republicans will hold the Senate, and the Democrats will hold the House. Leading up to the election, based on an investor survey completed in August, 58% of investors indicated the presidential election is not a major factor in their investment strategies. The big element of this is that most investors believe the long-term yields delivered by commercial real estate will remain sound regardless of the election results. In my conversations with investors since Election Day, this position has been reiterated. The investors I spoke with believe the divided government will provide balance and stability. As the dust settles, most believe Joe Biden will have an increased focus on resolving the health crisis, the critical underlying challenge that has prohibited a full economic recovery. Another top issue will be the much needed stimulus package, which should come together soon now that we have cleared the election. Although the stimulus that makes it through the divided Congress and the president may be smaller than would have been delivered under a blue wave scenario, it will still likely be significant. However, a moderate-sized fiscal stimulus will likely only give a moderate boost to the economy, perhaps giving it a 1% to 2% lift in 2021. And that will keep pressure on the Federal Reserve to maintain loose monetary policy, sustaining the low interest rate climate. The exceptionally low interest rates of recent months have been a strong positive force for commercial real estate investors. The spread between the average commercial real estate cap rate and the 10-year Treasury has widened to 550 basis points, one of the widest margins on record. This offers investors particularly strong levered yields, and if interest rates remain low, as is anticipated, and financial liquidity remains strong, as it has been for most property types and locations, then investors could be looking forward to a favorable real estate investment climate. On the other side of the equation, the most prominent concern I've heard from investors has centered on some of Joe Biden's proposed tax plans. Most specifically, investors have questioned his proposals on capital gains and the possibility of eliminating the 1031 tax-deferred exchange. While it's possible taxes could be raised in the next few years and the 1031 exchange could be eliminated, the divided Congress reduces those risks substantively. So the key election takeaways for investors are: number one, the divided Congress will hopefully deliver a stimulus package soon. Number two, some taxes may be increased, but likely not by a lot and not soon. Number three, an increased focus on the health crisis will hopefully dampen the spread of the pandemic while freeing up the economy for long-term growth. And finally, we will not have the election cloud hanging over us as we have for the last several months, and that will reduce uncertainty. That combination is a good combination for real estate investors. Now, if you'd like to get the opinion of one of the nation's top economic and financial experts, I'd like to invite you to watch the upcoming webcast featuring Dr. Ben Bernanke on November 18th. This live webcast, hosted by Marcus & Millichap CEO Hassam Naji and True America Multifamily's CEO Robert Hart, and sponsored by Pacific Western Bank, should be an exceptionally informative event that will help investors see what's coming on the horizon.